following are subsequent post-statement of financial position events. For each of the events listed, what we're going to do is we're going to indicate whether the company should either adjust the financial statements, disclose the event in the notes to the financial statements, or neither adjust nor disclose. So number one, settlement of a federal tax case at a cost considerably higher than the amount expected at year-end. So as we know, we have two types of subsequent events. We have subsequent events that relate to events that existed at the statement of financial position date, and we have subsequent events that did not exist, do not relate to position events that exist at the statement of financial position date, things that happen after. So this lawsuit clearly happened before the statement of financial position date because they accrued it or they had an expectation at year end, meaning that it existed. So the information around the settlement of that lawsuit, because it relates to something that we were already expecting at year end, we would adjust the financial statements. Okay, number two, introduction of a new product line. So introduction of a new product line is just a normal course of business, and we would neither disclose nor adjust. 3, loss of an assembly plant due to a fire. Well, if we think about our two types of subsequent events, clearly this event, the fire, occurred after the statement of financial position date, so we would disclose it in the notes to the financial statements. Number 4, loss of a significant portion of the company's assets. So it seems that assuming it says that this is a post statement of financial position event. So in that case, we would disclose what happened. Number 5, retirement of the company asset. This is just a general part of business operations, so we would do neither. 6, prolonged employee strike. Well, IFRS and ASPE take the view that strikes are common knowledge, so they actually don't require them to be disclosed. So we were going to go with neither. 7, loss of a significant customer. This is just a general part of business operations. So again, the answer is neither. We wouldn't disclose it or adjust. 8, issuance of a significant number of common shares. Now, thinking about our subsequent events, this clearly didn't exist at the statement of financial position date, but it could be material, so we are going to disclose. 9, material loss on year-end receivable because of a customer's bankruptcy. Well, thinking about our two types of subsequent events, the receivable existed at the statement of financial position date. So if that entity went bankrupt and it's going to impact the net realizable value of that receivable, we would go back and adjust. 10, hiring of a new president. Again, neither. General business operations. 11, settlement of a prior year's litigation against the company for an amount less than the amount accrued. Because again, this is related to something that we had in our books at the statement of financial position date, we would go back and adjust the financial statements. And 12, merger with another company of similar size. Well, the merger would have happened post statement of financial position date, but we would disclose that in the notes. And that takes us through 1 to 12.